Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Scott Melker. He's crypto trader and investor, also the host of the Wolf of All Streets podcast, as well as the author of the Wolf Den newsletter, to discuss PayPal stablecoin and what it means for the regulatory environment as well as the crypto space in general. Scott, it's great to see you as always. And I want to start with the crypto space before we get into PayPal. Talk about August trade. It feels like we're truly in a summer lull here in terms of the crypto space. Is it just kind of a wait and see environment right now?
I think so. And I think that that's pretty standard in most markets and something that we've seen almost every single year, especially with Bitcoin. We do see generally a bit of downside, but sort of a slow grind on no volatility and no volume. Actually, if you look at most metrics, volatility for Bitcoin is at a historic low right now, which is saying something. If you look at Bollinger Bands for technical analysis, the weekly bands are as tight as they've ever been. Not seeing expansion there and seeing almost no volume, especially because a lot of the banking issues and regulatory issues. So not a big surprise right now that we're seeing a whole lot of sideways. Seasonally, we generally start to see things pick up again end of September, early October. So nothing really surprising here, although it is funny that every time you and I chat, the price does at least seem to move some. It has dropped over $1,000 in the last 36 hours or so.
So what are some of the key technical levels or psychological levels that's important for Bitcoin?
I think 28,600 is a huge level, which is being broken at the moment, but you really need to wait to see what happens at the end of the week. That was the low of the entire 2021 market. Price went to 65,000, back to 28,600. Again, a very boring summer that had some downside, and then all the way back up to 69,000. So that's sort of a key level. Below that, I would say 25,200 area. That's the area that the BlackRock launch took off. When they announced the BlackRock ETF application, price went effectively from 25 up to 31. And also the area that was the first higher high technically in the after the entire bear market. So I would say, we kind of trade between 25 and 28.6. And if we're above that, 28.6 and 31, and then above 31, we can really start to talk about more price appreciation.
So let's talk about PayPal for a moment here. I mean, of course, this is big news. It's a big institutional adopter here, and it's launched its U.S.-backed stablecoin to help facilitate payments. What does that mean? How is it issued? What is it designed to do?
I've seen a lot of different takes on this. I think it's just like any other stablecoin. It's being issued by Paxos, much like their own stablecoin USDP and BUSD, which was the Binance stablecoin that came under fire. But it's really a standard stablecoin that will allow for faster payments on the Ethereum network, hopefully cheaper down the road. But really, this is just another addition to the stablecoin market. USDC, USDT are both very, very popular. USDC itself from Circle is very heavily regulated in the United States. So I think this gives us another regulated player that will give us more credibility. I don't see it as huge of news as a lot of people do, because this is something that already exists, but it's always nice to see this sort of increased adoption by institutions. So I just see it as a major step in the right direction.
And when we say U.S. backed, it doesn't mean it's backed by the government. It's just the denomination that it is tied to.
Correct. It's backed by generally cash and treasuries in a regulated bank account. So there was always a lot of controversy as to how USDT, Tether itself, was backed. That's largely gone. But a company like PayPal or USDC will have very heavy accounting from a big four firm. They'll be showing attestations and documentation to show that it's backed. And these stable coins make an insane amount of money. People don't realize Tether, because of the high interest rates, has been making almost $1 billion a quarter. I think they were over $1 billion in the first quarter of this year, because they can put the money that's backing Tether or backing their stablecoin into short-term treasuries and earn 4 or 5% and move in and out of those whenever somebody comes calling for their money. So really a profitable business. I totally understand why PayPal would want to be in it.
I mean, it's a win-win for them, essentially. But for people who aren't into crypto, why would they choose to use a token? Why not just use Venmo or traditional PayPal?
I think it's much faster. You have better control of your own assets. And even though it is PayPal, in theory, you don't have a third party that's a gatekeeper on your transaction. You can transact with this stablecoin in or outside of PayPal and direct to another person. So if you took that stablecoin out of PayPal, put it into your own wallet, you now control the keys, you control the money, you can send it, receive to anyone you want anywhere without that third party in between. When you're sending a Venmo transaction, a PayPal transaction, you're still depending on that third party to verify your transaction to make sure that it goes through. And a lot of people want to be able to interact directly. I mean, we've even seen now that, the government effectively wants you to report any Venmo transactions over $500 or $600. I can't remember the exact number. So a lot of people really just don't want to be a part of that system.
Well, speaking of the government, if these stablecoins are pegged to the US dollar, why doesn't the US government just come up with a digital source of currency?
I think a lot of people think that a central bank digital currency is the future, although Jerome Powell himself has pushed back pretty aggressively against that idea. But we are seeing pilot programs for those in over 100 countries. China has already rolled one out. The problem is with a central bank digital currency, it can be a real violation of your privacy, right? They want your taxes, they take it out. They want to know where you sent your money. They know exactly where it went. They want to give you stimulus. Here's $1,000, but you can only spend it on food and clothes, and it expires in 2 weeks, right? Those are the kind of things I think a lot of people who push back against central bank digital currencies are afraid of. I think that in the United States, we often see situations where private companies do things better than the government. So if they can fully regulate a stable coin from a private company that understands payments, that's probably a better route for them. And frankly, this helps contribute to dollarization all over the world, especially Tether, which we talked about before. I mean, this is doing billions and billions and billions of dollars in transactions every day in places like Lebanon and Argentina and Venezuela, where there's hyperinflating currency and people want access to dollars and to be able to transact. So this is really helping the dollar actually proliferate in those places where people can't get them outside of crypto.
Well, if we want to talk semantics here for a moment, centralized stable coins, isn't that kind of antithesis to the ethos of crypto, or does it even matter at this point?
I think it matters, and I think it is, but I don't think it matters to most people, right? When you're inside the echo chamber, it's very easy to rail against centralization, to say these things are bad, but adoption is not going to happen in the way that your most vicious Bitcoin maximalists want it to, right? They want everybody to only have Bitcoin, not stable coins, opt out of the dollar system completely, control your own keys, don't use a bank. That's not realistic for 99.9% of the people in the world. And if you're going to get to mainstream adoption, we're going to have banks custodying these assets. We're going to have trusted, quote unquote, institutions utilizing them. And the real fact is, people all over the world who are living in places with hyperinflating currencies or inflation in general, they want dollars. That is the global reserve currency, and they can't get them without going on the black market. So this is a way to do that in a trustless manner and to be able to transact directly with people privately.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.